Hi, and welcome back to one of the another next episode in Robin's School of Tradings. One of the students said in a class, Robin, every time you say we can make 3 to 4,000 rupees on daily basis, depending on the market, how can we do this on a consistent basis? Is it true or is it false? It's a valid question. And the second question he said, if it is true, then please show us how we can make this on consistent basis. One day you make 4K profit, next day you make 8K loss, and it doesn't make sense. The objective here is to make profit on consistent basis and work on some fundamental flow where we can build up our strategies. Welcome back to Robinhood School of Traders. Today, I will share one of the strategies which we use in our Robinhood School of Traders, which is sort of gives us a return of minimum 4 to 5K on daily basis. It depends on immense practice, and as I keep on telling, 80% is your psychology or 20% is strategy. So this is, we'll take one more strategy. It's free of cost in TradingView, and here you don't have to break your head, and all my strategies are designed such that you can do this, adopt this strategy in mobile, and you can do this strategy while working in job, speaking to your friends, having a cup of tea, or traveling. There is no point being glued to in this front of the screen. If you get the number, you make it, and you just put a stop loss, then you can do it. So the topic is very simple. The power of Fibonacci extension and Fibonacci retracement is what we're going to see. This is one of the greatest strategies, and believe me, I enjoy this particular strategy. I'm sure we all together enjoy this strategy. So let's get started. So what is Robin Fibonacci? How do we start? So the Fibonacci extension are the tool that the traders are used to establish a profitable target and or estimate for the price may travel after pullback is finished. So we will take what is Fibonacci extension and Fibonacci retracement. So basically these are few numbers. These has nothing to do with any kind of formula. So based on 3 lines, this comes to a formula. Because Fibonacci are common in daily life, some traders believe these common ratios may also have a significance in the financial market. By the way, guys, this Fibonacci was developed in 12K century. Yes, you heard it right. It's a very old tool, and when we get deep into the formula, I'm sure we'll love it. It was developed by Leonardo Piacion, right? I think I've not pronounced properly, forgive me. But later, normally known as Fibonacci, and who lived in Pisa. So 12K mathematician formula, which is we are using, and today's 24K, 2024. So that is the importance of this series. And by the way, he was not very strong in that particular time. There was nothing what called share market, but we still use this formula and to derive money. So let's take. So very simple. We'll just brush up what is Fibonacci extension and retracement. We just now what is Fibonacci? What is extension? What is the difference between Fibonacci extension and retracement? Nothing. While extension shows where the price will go following a retracement, and Fibonacci, while Fibonacci, this is what we call retracement, while Fibonacci extension shows the impulsive wave, how much the headroom is there, how much the price will have. So as simple as that. When the price is making a follower, these are the levels, forgive me, we can expect the price to have some sort of resistance. So this is what simply what your retracement. And for extension, when the price is making higher highs, how much high it can go. So the limitation of Fibonacci, it has only a limitation that it can't be traded only with isolation. You have to use another any kind of indicator or candle pattern also will do. So Robin, what is Fibonacci? So basically there were 2 numbers in binary, there's 0 plus 1. So from these the series has started 0 plus 1, and if you simply add this 0 plus 1 is equal to 1, and next you simply add 1 plus 1 is equal to 2. So from here this series starts. You add simply 1 plus 1 is equal to 2. Now you simply keep on adding. So you get a lovely series. This series is called a Fibonacci series. So simply add 1 plus 1 is 2, 1 plus 2 is 3, then 2 plus 3 is 5, then 3 plus 5 is 8, and 5 plus 8 is 13, 13 plus 8 is 21, and this is 34. This is nothing but your exponential series which you use in our EMA kind of series, and this is also one famous indicators there. It's called Guppy indicator. We just modified this. Friends, if you get deep into this, simply keep on adding, I'm using a laptop. I'm running Windows 11 with this Excel can't capture more than 11 digits. Guys, see the astonishing figure. Now, deeper we go. If you simply divide this number, if you divide this number, simply divide 8 by 13, you get this series. So you can see the deeper we go, since the Excel can't capture more than 11 digits, had it been a super calculator, I think, guys, it would have given 21, 22 digits after decimal. This is the beauty of this indicator. So this is, we got one figure, 61.8. These are nothing but golden ratios, right? So to become rational, it has to be golden ratios, right? Yes. Now, this is one figure we're getting. Robin, the deeper we go, even the decimals are same. If you subtract this and this, it was 0. Now, next series, 8 divided by 21. Right, 8 divided by 21, that means you're negating this middle number. To simply get deep into it, how can this be? The decimal point are also same. As I said earlier, this is a typical computer laptop which I'm using. Had it been a supercomputer, it will also match to decimal. So we get this ratio. This is also what we call a golden second series. The third series of golden ratio is what? 23.6. These are all golden ratios. I mean, what are golden ratios? Suppose if the price retraces, the first level, it will come to this 23.6. Then we have 50%, right? Then we have 38.2 and 61.8. So science says if the price holds 23.6, with high probability it will touch 38.2. And if it crosses 38.2, the mathematics says the high ratio probability increases that it will go ahead and hit 61.8. What if we know this level while we are trading in the morning? What if you know the level if you're trading in any kind of time frame? Yes, you heard it right. For scalping, for 3 minutes, for 5 minutes, 15 minutes, and even 1 hour. So if we know the level only by Fibonacci tools, then how can we use it? This also will act as a support, strong support or resistance when we take it forward. So let's get started. This is a nifty daily time frame, guys. So I went to trading view. I did nothing. So earlier we had to plot Fibonacci extension, take the highs and lows. So this is auto Fibonacci extension and retracement. So what we go to trading view is simply plot auto Fibonacci extension and retracement and draw these lines. Simply draw these lines. The more the conjunction, if you have the more coincidental lines, so that has a strong support or resistance. Yani, that means if you find the more and more lines converging, so that is a theoretically more support and resistance. Probably looks very clumsy. Yes. So now let's go to deeper chart. So simply what I did to make this look very brilliant, I plotted the lines. So now this looks very clumsy. So now let's take it. Now if we take this into next chart, these are the levels of the Nifty on daily time frame, guys. If you know the levels, we can play and act accordingly. So these are the levels where you can trade Nifty or any stock accordingly. Similarly, we did a bank Nifty also. So what we are doing, we were simply going to trading view or simply plotting by default auto Fibonacci and auto retracement, right? And whatever levels are getting, we'll simply plot it down and use that information to take that as support and resistance. It works very, very fine. And wherever you find a more conjunction, wherever we find a more congestion in both the line converging, that will act as a very predominant support or resistance. Over here, we can see this zone has been acting for Bank Nifty as a very strong support. In this case, as a resistance, and when in this case, in both the case as a resistance. Okay, now to modify this, we simply add. Robin, if you see this gap, so this is a 15 minutes time frame. I did nothing. I simply plotted a 15 minutes time frame. Now the gaps are huge. Robin, you will see how to trade this particular zone. So these gaps are huge. So in that, you simply go to zigzag indicator and plot this line. So in trading view, you go to zigzag. I made a video of this zigzag plus a Fibonacci. So guys, these are the levels which you'll get in 15 minutes time frame. You can use information to trade accordingly. So this is, for example, from 49,300, you have 600, almost 300 point of move. So this information, if you have, then you can play accordingly, or you can use the number of lot size, or you increase the number of lot size. Obviously, it looks very evident when the candle has been made. we can find after such a fall, this is some sort of user bottom, and it was very confirmed by your Fibonacci level. And guys, this line will come automatically. You have to don't draw it. This is nothing but zigzag with Fibonacci. Please go refer to my old video, or I'll share the link in the video. Go through the video. It's a very lovely video. All these things are free of cost in trading. You have to do nothing. Now, once you take this information, just draw the line and you can add whatever indicator you want to add. Let's take one more example. Reliance. Robin, where is Reliance heading? So Reliance, why I'm thinking Reliance, because the number highly weighted in Nifty. So this is Reliance on daily time frame, and this is how the Reliance going to be is acting as of now. So Reliance is very strong support over here in the vicinity. The levels will come in the figure itself. So Reliance is having a strong support in the vicinity of 1240 round, and a very steep resistance as of now in 1272. Use the information. You can use the information and make money in your options and futures. So this data is prima facie. Since I've done this on daily chart, you can do this on weekly for swing trade. But if you use the information, you can do this for options. Mind you, this I'm just trying to get a strong support or resistance. After that, you remove the indicator and use whatever indicator you feel like. So once ever you draw the support line and resistance lines, draw these levels, and these levels are expected by the market, because these levels are nothing. These are the levels given importance by FIRDI. So you can use information and make money in your direction. Okay, now let's take one more example. TCS. TCS, if you see, has giving a fall, right? And this is again in daily time frame. So what is the indicator saying? The fall is yet to be confirmed. Or the zigzag is a lagging indicator. But we can see a very, very strong support in the vicinity of 4,000 and very, very steep resistance in the vicinity of 4,000 to 4,200, or precisely 4183. These levels will come into your screen automatically. Now, if you have the information, you can short it, make money. If you have the information, you can take a call and make money. This is in a daily time frame. You can use this information and to take a trade in 3 minutes, 5 minutes, after you just type in option and make. Guys, what else you want? An indicator by default. Previously, it was we had to draw a line, so it was depending what is the high you to catch. But this is making all of your own. So what we have done nothing. We have taken the help of Fibonacci, extension and retention, and just modified that with zigzag with Fibonacci. So these will give you levels. Create these levels, you will make money. One can make money in stock, only he or she can trade the levels. Guys, I'm sure you must have enjoyed the video. If you enjoyed the video, do subscribe to my channel. So today's video will discuss how to make 4K to 6K on consistent basis without with the aid of a modern indicator. Thank you.